Welcome to a new Bitcoin Books video. What if I told you that the global financial system is a house of cards, and it's not just about to fall, but it was designed to fall? That's the pretty wild thesis of the book we're diving into today, The Great Taking. This is a story that gets to the very heart of what it means to own anything in our modern world. The author, David Rogers Webb, hits you with this right at the beginning. It's a bold claim, and it sets the stage for the book's main argument, that the financial system we live in hasn't just become fragile by accident, it's been intentionally engineered for one final catastrophic event. Now, to really wrap our heads around this, we're going to break it down. All right, so first up, we'll tackle the Great Taking thesis itself. Then, we'll look at how the Great Depression might be a blueprint for all this. From there, we'll get into the nitty-gritty of the legal changes that paved the way, how the seizure could be automated, and what the author sees as the final endgame, which involves central bank digital currencies. Okay, Section 1. Let's dive right into the core idea here, the Great Taking thesis. And the key thing to remember? The book claims this is all part of a plan, not just some random accident waiting to happen. So what is this Great Taking thing, really? Well, according to the book, it's the grand finale of this massive global debt bubble we're living in. The core idea is that there's a plan to confiscate all financial collateral. And I mean all of it. It's not just your stocks and bonds. We're talking about the cash in your bank account and even the actual physical property owned by public companies. You know, their buildings, their factories, everything. The book doesn't call this a simple market crash. No, it's framed as a carefully crafted plan, almost like a quiet war fought with legal tricks over decades. And to really get what the author thinks is going on, we have to look back in time, specifically to the Great Depression. The argument is that what happened then is basically the blueprint for today. So what's the trigger? The book points to something called the velocity of money, basically how fast money changes hands in an economy. Think of a healthy economy like a humming engine. Money moving fast is the fuel igniting, keeping it running. But when that slows down, the engine starts to cough and sputter. And that's the parallel the author draws. A huge drop in money velocity happened right before the Great Depression. And guess what? A new, even bigger drop started back in 1997. The book claims that printing more money doesn't fix it. It just pumps up these giant asset bubbles. Now, the author goes a step further and says the Fed intentionally caused the Great Depression by yanking money out of the system right when banks were failing. And as a sort of exhibit A for this idea, the book points to this pretty shocking admission from Ben Bernanke himself back in 2002. So you have events like the 1933 bank holiday where they literally just took people's gold. The book says that was a practice run. But you're probably thinking, how could that happen today? Our system is way more advanced, right? Well, that brings us to the absolute heart of this whole thesis, what the author calls the quiet legal revolution. Okay, buckle up because this is where it gets a little wild. The argument is that for the last 50 years or so, the very meaning of owning your stocks has been secretly changed. Remember old-timey physical stock certificates? Well, they got rid of those. That was called dematerialization. And they replaced real ownership with this sneaky legal idea called a security entitlement. Now, this is the crucial part. The book says you don't actually own your stocks anymore. You just have an IOU, a contractual claim, against your broker. To make this sink in, the author gives a great analogy. Imagine you go out and buy a new car. It's yours. But what if the law said the dealership could use your car as collateral for their loans? And if the dealership went belly up, their lenders could come and just take your car. That's exactly what the book claims has happened to your financial assets. Your shares are all just thrown into one giant pool at the brokerage. And if they go bankrupt, your legal right to claim your specific shares, it's gone. The big secured creditors, they get to cut to the front of the line. And if you think that sounds crazy, the book presents this quote from the New York Fed as basically the smoking gun. You have Fed lawyers literally explaining to the EU that, yep, in our system, the secured creditors' claims have priority over yours, the entitlement holder. The author then argues that this whole system was pushed on the rest of the world so that these creditors could grab assets no matter where they are. And it gets deeper. The book points to these safe harbor rules in U.S. bankruptcy law. The claim is they're designed to protect a special club of massive financial players. It basically gives them a legal green light to snatch up collateral the second someone gets into trouble, and no one can stop them. So you've got this new legal system, you've got these protections for the big guys. So what's the trigger? According to the book, it all comes down to the central clearing parties, or CCPs. These are the middlemen for the entire derivatives market, a place where a mind-boggling amount of risk is concentrated. And here's the kicker. The book argues these CCPs are set up to be incredibly fragile. In fact, it claims they are designed to fail. So, the failure of one of these CCPs is presented as the tripwire for the whole event. The book lays out a chain reaction, like dominoes falling. Step 1. The everything bubble gets popped on purpose. Step 2, the CCPs can't handle the shockwave, and they collapse. Step 3, those safe harbor rules kick in, protecting the big creditors. And the final step, automated systems, which are already built, instantly hoover up all the collateral from regular investors and hand it over to the secured creditors. Just like that, gone. And to give you an idea of just how fragile the system might be, the book points to the DTCC. I mean, this is the entity that clears the entire U.S. stock market. And its capital buffer, its shareholder equity, just $3.5 billion. That's it. It's like trying to stop a tidal wave with a sandcastle when you're talking about the trillions of dollars in risk it's supposed to cover. Okay, so the collapse happens, the collateral is taken. What's next? What's the end game in all of this? That brings us to the final chapter of this whole plan, according to the book.
The end game, the author argues, is to usher in a totally new monetary system. And it starts with the too-big-to-fail banks actually failing. When they blow up, your deposits are gone, and insurance funds like the FDIC are wiped out in an instant. And in the middle of all that chaos, a solution is presented on a silver platter: Central Bank Digital Currencies, CBDC.
And this isn't just some sci-fi theory. The book stresses that the plumbing for this is being laid right now, as we speak. You've got 114 countries, that's over 95% of the entire world's economy, all working on CBDCs. The groundwork is being laid everywhere. So why do this? What's the point of CBDCs? The book concludes it's not about making payments easier. It's about one thing: control, total control. And it pulls this quote from the head of the Bank for International Settlements. This is like the central bank for all the other central banks. And he says it himself. CBDCs offer absolute control, where they can literally program your money, telling you if, when, and how you're allowed to use it. The book ends by quoting Charles Dickens, which I think is a really powerful way to wrap this up. It frames this whole thing not as a prediction that's guaranteed to happen, but as a serious warning. You know, a look at the shadows of what could be, leaving us with the question of whether we can still change course. For those who want to learn more, the link to get the book is available in the video description. If you found this content interesting, please subscribe to the channel and like it to help us reach as many people as possible. Thank you.